Mr. De Stoop, thank you very much for joining us here on CNBC. The numbers we heard yesterday were staggering. I guess the question is, how long do you foresee these kinds of rates and that kind of demand for your services and storage now lasting?
Well, thank you very much for inviting me. We believe that it's going to last as long as there is a discrepancy between the production of oil and the consumption of oil. And coronavirus means that there's a serious decrease on the consumption side, which means that a part of the oil that is being produced at the moment needs to find a place to be stored. And as you rightly mentioned, the land storage are nearly full, which means that people are turning to ships to store the oil. And we have on every single ship a capacity of storing 2 million barrels when it comes to a VLCC and 1 million barrel when it comes to a Suezmax.
What's amazing is that despite this continued drop in new wells and a talk about an output cut in the United States, Hugo, we are still seeing exports actually rise from the U.S. In other words, there's still a lot of oil out there. I'm sure you track that market as well. How long do you see, oil staying where it is versus a sharp decline in ultimate output?
I think that the answer to that question is very similar to the longevity of our good markets. As long as the oil is cheap, people will try to store it for later days. And so at the moment, they are buying whatever they can grab their hands on, as long as they find a place to store it, because that's the critical problem. But the oil price is obviously very, very low. So it attracts a lot of buyers. And I suppose that's true all over the world. It's not only true for the US oil, but it's also true for the oil that is coming out of the Arabian Gulf. So all the countries around there are pumping as much as they can. And the cuts that have been agreed earlier this month will only take effect as of the 1st of May, so next week. So in the meantime, we are faced with the situation where there's a lot of oil that does not get refined into petroleum products, because on the petroleum product side, there is no demand, or there is very little demand.
What are you going to do with all the free cash flow, Hugo? All these huge contracts you're signing is just going to put a lot of cash into your and shareholders' wallets. What is your plans for the money? More new ships?
Well, we know, we have a very cyclical market, and so we are very disciplined people. We have a dividend policy, which is a return to shareholder policies. It can be dividends or it can be share buyback. At the moment, it's likely to be more dividends. And we will return 80% of the profits that we make on a quarterly basis.
So we look at the number of ships that are currently on the ocean. There's been a lot of ships scrapped. Obviously, that's going to come to a close, I think, Hugo, because everybody's just going to want to keep whatever is floating out there. How do you see the ship market itself doing in the next year or two?
Well, that's a very dynamic situation, because nobody wants to scrap a ship when it can earn so much money. That's obvious. But we live in cyclical markets, and we have good times and we have bad times. And in the bad times, it's when you see a lot of ships going to the scrapyard and being basically eliminated and destroyed, so that the supply side shrinks by definition. The other side of the supply of the fleet, is the number of new buildings that are currently being built, and that's very, very thin. So it has never been as thin as it is today, and it takes about 18 to 24 months to build a ship. So it's not something that can change tomorrow. So we're looking at this year. Yeah, go ahead.
Hugo, I got to jump in and wrap it up, but I want to get in this. Investors say, listen, don't invest in tanker stocks because they're just so volatile over the years. They go up and down on oil. What's your message to the global investing audience about why tanker companies, maybe it is different this time?
I think it is different, and very much for what I said. I mean, there's a lot of older tonnage that could be scrapped in the downturn. We are nowhere near downturn. We're going to enjoy this year, and we're going to look forward to enjoy the next. And if the next is a downturn indeed, then there will be a lot of ships that will go to the scrapyard, and we rebalance the market. So if there is a crisis, we don't believe that the crisis will be long-lasting. And that's something very, very different than what we have seen in previous cycle, because normally the order book is around 15% of the fleet on the water. And as we speak right now, it's less than 7%, so less than half of the average that we have seen in the last 10 years. So it's looking good.